Yo, what up, my Facebook social media family? This is your favorite realtor, Josh Brown. And today, as you guys know, I have another market update. This market has been doing some crazy things. We've seen interest rates rise. We've seen interest rates come down slightly, but then jump right back up to where they need to be. We're also expecting another interest rate increase in November on November 1st. So today, I just kind of want to show you guys what's going on in the Denver metro area because our market is going to be a little bit different than all the other states. So, I like to make sure I make it hyper local so that we can understand what's going on in our market. So let's get started. And if you guys have any questions, man, please comment below. Don't forget to like and subscribe to your boy's channel. That way I can bring you guys more content of things that you want to see. And let me know how you guys feel about these market updates. They're very detailed, so you should get a lot of more information than you need, but it's always to be prepared. It's always better to be prepared than not prepared. So let's kind of just get started. We'll get started with the market snapshot. And the market snapshot is just going to show you guys what's going on with the actives, the pendings, the solds. So as you can see, we're starting to see the actives go up a little bit, but they're slightly leveling off in September. And with the pendings and solds, they've seen a little slight decrease. And this is going to be for detached single family homes and attached single family homes. And as you can see, for both detached single family homes and attached, they're about the same trajectory. Except for the attached single family homes, they're a little bit more kind of on a balance. Now let's look at the active listings analysis. I mean, this chart right here should speak for itself to let you guys know where inventory is going. As you can see, even in 2020, 2021, we're at some of the lowest levels we've seen in 2021, and then we were at more, okay levels in 2020. But as you can see, we've seen a sharp increase in active listings, and now we're kind of seeing those actives level off. When we go into the later months, the winter months, we'll definitely see that kind of not go up so much because usually the winter months are going to be the slower times of the year. Everybody's moving, they're going to see family. You got Thanksgiving, you got Christmas, you got New Year's. So September, as you can see, is kind of starting to level off right here. And in August, it leveled off a little bit more too. So that's, month over month, that's about a 2.35 increase. And I would say September 2020, there was 6,340 active listings. And that's up 25% compared to 2020. And as you can tell, it's up way more than that if we compare it to 2021. And as you guys can see, it's kind of doing the same thing for the detached single family homes and the attached single family homes is, we definitely seen an increase, but we're starting to see a little bit of a level off and kind of that balance. It's kind of going flat. Now let's look at the months of supply. And I mean, everybody knows why the months of supply is important. That's, all the homes that we have on the market. 4 and 6 is going to be a balanced market. Anything above 6 is going to be a buyer's market. Anything below that, 4 is going to be a seller's market. So right now, technically we're still in the seller's market because we only have 1.64 months of supply. And as you can see, it's kind of since June, we've seen the supply go up. Month of supply of inventory increased to 1.64 months, and that's an increase of 4.7% month over month. And if we look to our left here, the reason why I like these market updates is because it shows us all the different counties in Denver, not just the Denver metro, the Denver area. Adams County, 1.7, Arapahoe County, 1.5. And as you guys can see, these year over year changes are crazy. 133%. Month over month is going to be 8.5. And I'll be able to kind of show you guys why this is important later when we go down a little bit towards the prices. But there you can see all the counties. Elbert County, man, they have the most inventory out there right now. 3.3 months of supply. So we look at the detached single family homes, they're at 1.7 months of supply, which is a 4.1% month over month. And as you guys can see, it's kind of the same trajectory through all the counties, with Elbert County being the highest again. Now let's look at the attached. The attached single family homes, they're not, they don't have that much more supply, but they definitely have also been seeing an increase. And as you can tell, these increases all started in about June. They all started in June. And as you can see, from June, we've been seeing, a substantial increase in inventory. The months of supply of inventory increased to 1.36 months, and that's a 6.8% month over month. And as you guys can see here, the different counties, 2.2, Broomfield has the highest months of supply for the attached single family homes. Now let's move. And this is an important chart that I want you guys to look at really closely too, because if you look, we had some of the lowest days on market, this past year. And as you can see, the days on market has been just jumping up starting in April. We went from March, we had 11.5 down to April, 8.5, May 9, June 10, July 13, August 17, and then now September, 25 days on market. And if we look at the historical, we're averaging about 20 something days on market through the years. The average days on the MLS went to 25. That's up 42% month over month. So that's a substantial jump. And remember, guys, these winter months, you will see longer days on market because that's just the nature of the beast. That's just the nature of the beast. If we look right here, okay, let's just take a look right here. November, December, January, February, all the highest days on market. November, December, January, February, all the highest days on market. January, February, all the higher days on market. So, if we're going to look at historical data, we know that these later winter months, we're going to see higher days on market. But for my buyers out there, this just gives you more negotiating power. That's it. When we have higher interest rates, that means that we have more negotiating power. When we have low interest rates, we don't have that much negotiating power because we have so much competition. Right now, the competition is slim. So if you're looking for something and, the interest rate's a little bit high, that's okay. You might have to, lower your budget and go to something that's more affordable, because if you go to something that's more affordable for you, then when the time comes for those interest rates to drop again, then you guys can refinance that mortgage down, or you can just go sell that house and go get you something else that fits more of what you're looking for. It's all about getting in. The hardest part in real estate is getting in, and most people don't understand that. So let's continue on. And this is going to be a detached single family homes. As you guys can see, the days on market went up to 27 days. That's a 125% increase year over year. And that's a 35% increase month over month. And you guys can look at all the different counties to see that the days on market are going up. Douglas counties, they're seeing a 33 average days on market, 23 in Denver, Broomfield, 27, Arapahoe County, 28, Adams County, 27. So, this is something that we do expect. We do expect to see the average days on market go up in all the counties, no matter where you're at, especially when we're getting into these winter months. And that's the same for the attached single family homes. They probably have the lowest days on market with 23. And now let's go to active and sold by price range. So, I mean, most people today, with interest rates rising, people's buying power has definitely decreased substantially. So, when we're looking at the actives and sold by price range, this is important because it's just going to show you what's active and what's selling. In the 3 millions, there's 141 active and only 17 have sold so far. So, yeah, let you know that's also bringing more days on market because we're having more properties come on. Before, if you guys look at this chart before, man, it was red. Red was outpacing the actives. Now it seems like we're starting to see the actives outpacing the solds. So now, there's definitely going to be more inventory, but that's just another opportunity for my buyers out there. I know you guys have been sitting on the sidelines saying, I want to wait for the interest rates to drop. You don't know what's going to happen. You don't know if the interest rates are going to drop. You don't know if prices are going to continue to rise. You have no idea. The only thing you can focus on when you're buying a house is in the moment. Make sure you plan your budget. Make sure your finances are in order and stick to your budget. And when the time comes for you to refinance to lower that mortgage rate, you can lower your mortgage rate, sell the house if you want, buy something else. But right now you have to take advantage of the opportunity that's there. So let's just move on down. This is just a detached single family homes. Okay, now we're going to move on to month of supply and days on market. These two correlate with each other because the months of supply is going to be the amount of homes, and then the days on the market is just going to be how fast those homes that are on the market are selling for. And before, these numbers were way down. They were way down in all the price points. But we've definitely seen an increase in the average days on market, which will correlate increase the months of supply because they go hand in hand. When the days on market are longer, you're going to see more supply. You're going to see way more supply. And as you can see, we're seeing a lot of supply in the 3 million plus. See, this is a buyer's market right here. So anybody looking in the 3 million and up, this is a buyer's market. 6 months of supply. 2 million down. So technically these are all still in sellers markets, but I'm pretty sure within this next month, we're going to see a little bit more supply, which in hindsight will bring the average days on market up too. And when we look at the detached single family homes, it's still pretty much the same stuff. Nothing different. We're seeing increases everywhere, guys. I'm not, as an agent, we bring buyers to the market. We bring sellers to the market. So in any market, we are going to be able to educate our buyers and sellers and let them know where we are at. That's the most important thing. And now we move on to the months of supplies. You guys can see that attached. I'm not really going to go over that because we already went over that. Now let's go over the solds. So month over month, the sold units, they decreased about 5% year over year by 23%. So as you guys can see here, there's only been 4,000 units sold. I mean, that's definitely a slight decrease month over month, but I mean, since May, that's a substantial drop. May we had 5,600. Now we're only down to 4,100. And like I said, I suspect us to see this go even lower because if we go back again to the charts, September, right here in 2020, 6,000 units being sold, right? But when November came, December came, January came, February came, we seen a sharp decrease. If we go back here too, November, December, January, February, sharp decrease. So if we go back and look here again, we're probably going to most likely see that same trajectory right here. And if you look at all the counties, you can see 851 units in Arapahoe County. So we've definitely seen some decreases, but that's okay. This is part of the market, guys. This is just what happens. Real estate goes in a cycle, up and down, up and down. But you can't time the market. It's time in the market. When you try to time the market, you miss out a lot. You miss out on a lot of opportunities. And it's the same for detached single family homes. Same trajectory. Same for attached single family homes. And now this is everybody's favorite slide right here, the average sold price. Now, guys, I mean, just look at this chart, okay? 2022, we've seen an increase. We've seen a little bit of decrease. We've seen a little bit of a decrease. And now it looks like it's trying to go back up, but it's trying to level off. So the average sold price for a detached single family home was 742,000. That's a 0.63 increase month over month. Douglas County recorded the highest average sale price with 123,000 above the 7-county average. Homes sold for an average of 56,295 more than this time last year. So when it comes to average sold price, we're seeing an increase year over year, but month over month, depending on what county you're in, you might see a slight decrease. But if you look at the chart over here, guys, it's not really by much. The prices have not been going down as much as everybody think that. $50,000 off a list price, $60,000, $100,000 off a list price. 9 times out of 10, those people price their homes too high from the beginning. And that's why you're seeing a big price decrease. And, in our area, we've been seeing some of the most price decreases we've ever seen. In the last day, we've probably had over, 250 price decreases. So that just lets you know that the market is starting to level out and it's starting to come back to an actual understanding. And as you can see, Denver County, the average sale price is 814,000. That's a 6% increase year over year, a 1.7% increase month over month. So, you can listen to the media all you want, but it's better to come to an agent like myself, direct, who's going to give you the proper data in our counties, in our state, so that you can understand what's really going on. I don't know what's going on in Florida. I don't know what's going on in Arizona or California, but I am your go-to agent out here in Denver for this data. So Arapahoe County, their average sale price is 689,000. That's a 0.7 decrease year over year. I mean, month over month, but a 5% increase year over year. The only county that had a year over year decrease in prices was Elbert County. But if you look at their month over month change, they had a 3% increase in price. So that lets you know that, the prices are still, they're still going up in some places, in some areas, and they're seeing a slight decrease in some areas. But to me, when I'm looking with my investors, we're looking at these counties and seeing where we're seeing the price decreases at, because that's when we're going to go, and I'm going to go negotiate the best I can for them to get them the best investment property they can for the right price. And if we look at the attached single family homes, the average sold price for attached single family homes was 479,000. That's an increase month over month of 6%. Denver County came in at 108K over the average sold price, averaging 587,000. Homes sold for an average of 40,000 more than this time last year. So once again, year over year changes are up. Month over month changes in some areas are up, and some areas they're down. As you guys can see the charts right here, month over month, Adams, Arapahoe, and Broomfield had a negative, and Denver, Douglas, and Jefferson all had positives. Denver had a 13% increase to 587,000, which is a lot. So just make sure, man, when you guys are getting your data and you're talking to the right people, so you know what's going on, the media will scare you. They will scare you out of the market. So don't be one of those people. This is just sold units year to date. Obviously, we're down 23% compared to last year, but that's just kind of something that I expect as an agent, especially going into these winter months. Okay, sold units, and then let's go to sold to list price. So, I mean, you guys see this sold to list price. It looked like it just jumped off a cliff here, and we're down to the low. So sold to list price decreased to 99.2%, down 1.6 month over month. The 500K to 799 price range averaged the highest at 99.1%. And if you guys know, this is just the amount. This is just the amount of the property sold to list price. So if it's listed at 500,000 and it's 100%, it's sold 100%, that means that it's sold at 500,000. If it's listed at 500,000 and it's sold below that, then the number will just decrease to 97% or 98%. And if we look at all the counties here, everything's pretty much going a little bit below what the list price was. So, when you're making offers on properties, try to take this into account and make your offer based on the data, so that when you're making an offer and I'm being an agent, I'm going to talk to whoever the selling agent is and let them know this is how we came up with our offer. In the in the 500 to 599 price point, they're going about 99.1%. So that's only like a 0.5% decrease in the offer that you're going to make in hindsight. So, and this is what I mean, you got to be careful. And just to let you guys know, we as agents do not dictate the price, neither does a seller. But, when we're out there educating our sellers, sometimes the seller they do not want to listen to the agent. So we have to price it where they want to price it at. So you can't always blame the agent on pricing, because at the end of the day, we really do not have the power to tell the seller, hey, this is where you should price your home and this is what we're going to do. If they agree with us, cool. If they don't, then we have to price it where they want us to price it. So just be mindful when you're looking at properties that sometimes the agents don't have no control over this, and neither do the sellers. The only person that dictates the price of a property is the person that's willing to pay for it. So when you're pricing a home, that's one of the most important things you need to look for. You want to get the most amount of people in that house so that they can see the property and you can get the house the best price. When you're pricing it high and you only have 1 or 2 showings, how do you know you're going to get the best price? You're not going to get the best. You usually don't get the best price unless you have somebody come in that, that 1 in a million person who wants to pay that price for the property. But we don't like 1 in a millions. We like higher odds. I want to have 50 showings. You know what I mean? Because then that lets me know if we have 50 showings and we have no offers, we are priced way too high. If we have 2 showings and no offers, we're still priced too high. 9 times out of 10, the reason most people don't buy homes is because they don't make offers on homes because it's priced too high. Price, condition, and location. Those are usually the two most important things when you're looking at pricing a home and getting the most value for it. So let's go down to sold to list price. As you can see, I mean, attached single family homes, they also seem to decrease. You know, the 3 million plus, man, if somebody got some money and y'all want to look into 3 millions, that's where the deal's at right there. Look at that, 93% to list price. So the sold to list price dropped 0.65% from August down to 2.4% from last September. The 300 and 399 price averaged the highest over asking at 99.91%. And if you guys notice too, a lot of these prices, we're going to have more buyers because interest rates rose. When interest rates rise, that decreases people's buying power. And I want to say for every percent interest rates rise, I want to say buyers lose about 10K worth of buying power. So take that into account when you are looking at, interest rates. And it might be more. I would have to definitely go back and double check that just so that you guys know the right information. But that's pretty much it, guys. That's my September update for you guys. October will be coming next month. But man, this market is definitely seeing some adjustments. I wouldn't say we're seeing a market crash, but I'll definitely say we are seeing a bit of a correction. And we're going to see a correction. With interest rates being as high, we're going to see a correction no matter what. It might take a month, it might take 2 months, but eventually we will see a correction. But at the end of the day, it's about your financial situation, where you are. Don't worry about the interest rates and don't worry about the price. Worry about your financial situation and what you can afford and stick to it. The only people I see fail in real estate are the people that don't stick to what they say they're going to stick to and they overbuy themselves. So, this is your favorite realtor, Josh Brown. Don't forget to like and subscribe to your channel. Comment below. Let me know what you guys want to see next. I'll have some more videos, some more property tours, some more market updates. But definitely comment below, man. Let's interact. And I told you guys, when I get a comment on one of these videos, I'm going to send out a gift card to whoever that is. So, comment below, baby. Let's get some action. This is your favorite realtor, Josh Brown. Over and out. Okay, Diamond.